Hello everyone, welcome back to Full Circle Trader. I hope you all are doing good. So let's wait for a few minutes, maybe a minute or two. Let more people join in and we will start. A very nice session. In fact, we have been having such kind of sessions from past few days, but today, it was a kind of good day for the scalpers and the intraday traders. Just let me know in the comment box if you guys are able to pick up few things, or if you are able to understand what I'm trying to share through my videos. I would really be happy to see the more and more and engagement the viewers will give to the channel, and if they come up with more and more questions, that would be you know very nice for all of us, because when we ask questions to each other, that way we really learn a lot. So I hope that people will start asking questions in the video. So on that note, let's just start the analysis. So this is the Nifty daily chart here. We have seen a very nice gap up day today. However, it looks like that range has kind of contracted. So we have tails to the upper side, a top tail and a bottom tail. So that shows that the range, the body of the candle is narrowed down as compared to the previous candles. So that kind of shows a indecision in the market as of now, and we have continuously two gap up days. So this kind of selling was expected. It was pretty much there on the cards. So I think we should take our trades according to how the market is behaving, how the price action is moving. That would be most appropriate to take the decisions, instead of just taking the trades in the vacuum, which I'm sure that if you guys are watching this YouTube video or maybe other videos, how to take decision at the right time. So after this gap up day, we have seen prices open. This is the 60-minute chart. Prices did open, they have cleared the daily resistance. However, after a few hours they came back down. That means that they were not able to hold the level, they were not able to sustain itself, and prices did came down. Now we do not have any strong, very strong support. So maybe a little bit of push back to the downside would move the prices, go past this rising 20 MA, and that might increase the selling. We have an expiry tomorrow, so keeping that in mind, if you are long in Nifty, I think if market gaps up or any sign, if market even open at the same level, you should take your decision at that point in time. So if you look at the 15-minute chart, if you remember, I mentioned yesterday that if Nifty will cross this level at least, that would be a good place to go long in the market, to buy the calls. However, the way the market has opened, and we'll look at the other data points, I did not feel comfortable. However, we find one opportunity to go short for a scalping trade, and I'll show you where we go short. So as you know that I prefer multiple time frame and alignment of the trend to take the trades. And when at this point in time, which is around 2:15, when market try to give a breakout, sort of a breakout here, but it failed and it immediately came back down. So if you look at that 2-minute chart here, so this was around 215. So just move on to the 215 time here. So this was I think yes, so it was somewhere here. Prices kind of give a retest of this high, and if you can see this bar here, so this bar has taken out, this was a very strong selling bar, and we have prices which were they moved up, they retested this high here, but they couldn't able to sustain much, and this bar here is a very strong bar, and it has taken out this small support here, and this bar, if you can just look, let me just enlarge it. So just look at this bar has closed at its low, so that's a very bearish kind of a signal for a short term, for a scalp trade. And right after this strong selling bar, we have a very small bar which made it a minus or a bearish 1 2 3 pattern. So I have kind of created another video on what is bullish and bearish 1 2 3 continuation pattern. So this is a continuation pattern. You can anytime go back in the channel and search for the bullish 1 2 3 pattern under the playlist, and you will find the full video there. So this is where we have gone short in the market for a very short scalp trade. So this was the one thing. Also, I have mentioned it a couple of times in the previous videos that I have taken a bull put spread trade, which I at the opening, when market gapped up, I was in a good profit in that bull put spread. So what I shorted was, I shorted the 16,900 and 16,700 put, and made that spread, which I closed today in a good profit because market gapped up, and it was just 1 day of expiry left, but I got almost 95% of my maximum profit, so I closed the trade. So that was one thing. Let's see the Bank Nifty chart here. So against the same thing, 2 gap up days here, and maybe this is the reaction of this price is cluster here, which is giving a kind of resistance to the prices. Again on the 60-minute time frame, this looks like a slowing momentum after this gap and this gap. So we have almost 2 gaps here. One was here and another was here. So 2 gaps. Now again we have the third gap today, but this looks like that the momentum has got slowed down. So we should keep that in mind tomorrow, that tomorrow being an expiry day, and we have these slowing momentum days now. So if prices go past or crosses below the rising 20 MA, and if prices move down below the 20 MA on 60 minute and on 15 minute, that is a sort of multi-time frame alignment for the 2-minute chart. So you can take the trade or a scalping trade, intraday trade in a 2-minute time frame at the very appropriate pattern. And when I say appropriate, I mean a very bearish, a no-brainer kind of a pattern which suggests that prices will definitely move down. So when prices starts to move down, do not take that entry. Let the price show some kind of retest, failures, right? So on the continuation pattern, which are one of my favorite patterns, because before continuation pattern, prices have already shown one leg of the trend, and then they take a rest, form continuation, and gives the signal that they are ready for the second leg. So that is why they are my most favorite setups to take the entries. On the 15-minute, again, prices couldn't able to sustain much above this 40,000 level here. So let's say for a bare minimum, if prices moves down below this gap up day, this gap which left here, so if prices moves down, then we can definitely go short either in 15 minute. If 15 minute is your favorite time frame, you can go short or buy put in 15 minute, and that will also make the prices below 20 MA on the 60 minute time frame. So 60 minute is a kind of higher time frame for the intraday and scalping trades. So if prices move down below the 20 MA in 60 minute and in 15 minute, that would a very nice multiple time frame alignment for the 2-minute chart and where you can take the trades. Let's just quickly look at the data side here. So it looks like that there are no strong buildups at the ATM, which is 17,500. We can see that open interest has reduced on both the call and put side. Now we have maximum open interest at the 17,600 at the call side and 17,000, which is intact on its position. So it looks like that open interest has reduced over time. Quickly look at the Nifty futures chart here. So you can see that the volume has reduced on this gap up day and open interest is reduced, which means that there is a kind of indecision situation. One reason could be tomorrow's expiry, which has come. Now there is no days left in between, and maybe that's why people are trying to, or the big money is trying to wind up their positions. We are seeing the slowing momentum on chart and reduction in the open interest front. Let's just quickly jump on to the US markets here. So Dow Jones after this day, and if you remember, I have mentioned it yesterday when we looked at the US markets, the prices were at its low, if you remember, and I mentioned it that we are not sure by the end of the session, buyers may take up the position, and they closed it as a bottoming tail bar. It did not close as a bottoming tail, which is a bullish bar. However, it has enough tails to the both sides of the candle and a small body candle that suggests that there are there are kind of tough fight between the bulls and bears and an indecision scenario here. We have a green day on Dow Jones, so let's see where it goes. S&P 500, which will give a fair idea about where the US market may go. So it has opened in the range of this candle. If it takes out the high of this candle, that would be bullish, and we might see the impact in our market as well. So that's it on the US market front. Let's just quickly look at the small cap chart. So small cap, we have 2 days and of gapping up, and today we have prices right at the resistance. So if selling starts on the small cap, it is gonna impact across the board on most of the sectors and broader indices, because a small cap is an index where a lot of money flows into. So selling in this particular broader index is a kind of indication that many index will get a hit. Then we have mid cap, again not a very bearish day, but a kind of indecision day, and we are right at this resistance area. So that could be one reason. Nifty 500 right at the resistance. So again 2 gap up days and then resistance. This could impact prices to move down. So we have all in all more or less same kind of scenario in broader markets, and we have then India VIX, which is below 18, so quite a comfortable level. Now in my opinion, tomorrow being expiry, if prices keep on moving upside, that shows that bulls are not caring of what has happened in the past, and they are just buying with their full force. If prices couldn't able to sustain much and they keeps moving down, that would be an indication that we should wait for the right pattern to take the intraday trades. But in any scenario, my advice to you would be that when you have both 60 minute and 15 minute in alignment, meaning the prices are below the 20 period moving average, that is just moving average is not a good support or resistance. So do not consider it, do not treat this moving average as a support resistance, but this moving average is, a moving average is a very nice trend following indicator, and it can give you, or rather it can help you to speed up your analysis. So when you have 60-minute and 15-minute in alignment, prices are below the moving average in both the time frames, then wait for the right bearish setup on 2-minute chart to take the trade. That would be the advice from my side. So that's it for now. Let's just wrap up the session. If you have any questions, always ask in the comment box below. Till then, catch you soon. Take a good care of yourself.